And stacking up today, Dan Passarelli, a market taker mentoring, joins me now. And Dan, always good to have you on the show.
Always great to be here.
So we've had a number of stocks that are reaching 52-week highs, and some of the names are surprising. J.C. Penney, who knew that stock was just about left for dead? And then Abercrombie, out of nowhere, climbing to a 52-week high. What do you think about these stocks?
Yeah, there's several. Altria, Procter & Gamble, there's a lot of them. And, you know, what we've been getting out of the media lately is all this bad news, doom and gloom.
It's true.
Yeah. We've seen the market rally, but there's a lot of doom and gloom, and these kind of big brand name stocks just kind of snuck up on us, and they're doing great right now.
They're motoring higher. So what do you do as a trader? What's your instinct here? To buy those stocks, sell those stocks, stay away from those stocks? What do you do when you see stocks start to leap up to these new high levels?
Yeah, well, my view for the first half of this year, maybe even going into the second half of this year, is that I think we're going to be in a volatile range. So when I see stocks that are trading at their 52-week high, to me that's a sign that says maybe not sell them with both hands, as they say down here on the trading floor, but really more like, let's not buy this, and maybe do something like a call credit spread.
Okay, so let's take a look at it. Individual stock that you are focused on, and it's 3M, the maker of Post-it notes and Scotch tape. Lots of office supplies happening there. So what would be your strategy on 3M?
Speaking of call credit spreads, it's a perfect example. 3M has resistance at $160 a share. So that means that it's had a hard time getting above that level recently. In fact, it hasn't been above $160 a share since June of 2015.
That's a long time.
Yeah, that's a really long time. So I think that we're not going to permeate that level. I think that 3M will stay below 160. So the trade that I like is selling the regular March expiration, 162.5, 165 call credit spread at about 40 cents or better.
So what's your suggestion through that options play for somebody who might not want to do an option strategy, but they like the sounds of this stock? What are you saying to the market, basically?
Yeah, well, people tend to think about trades in terms of, well, this is a bullish trade or this is a bearish trade. This is what I call a not bullish trade.
Okay.
Okay. So it can go down, fine. It can stay where it is, fine. It can even rise a little bit, and it's still fine. As long as 3M doesn't rise above 162.5 between now and March expiration, which is a couple weeks away, the trade's a winner.
Well, I hope it works out well for you. Thank you, Dan, for coming on the show today.
Thanks, Angela.